Imagine a publicly traded company on the prestigious Tokyo Stock Exchange, an entity answerable to thousands of shareholders and bound by some of the world's most stringent financial regulations, literally betting its entire future, its entire treasury, not on gold, not on government bonds, but on a single volatile and revolutionary digital asset, Bitcoin. This isn't a hypothetical scenario or a thought experiment. This is the live-fire, real-world reality of Metaplanet, and right now, as we speak, they are executing a financial maneuver so bold, so structurally audacious, that could either become a foundational blueprint for a new global economic paradigm or a cautionary tale studied in business schools for decades to come. Stay with me until the very end of this video, because what you are about to understand is not just a fleeting news headline. It's a seismic shift in corporate strategy that could directly impact the value of Bitcoin in your own portfolio, and I'm going to break down the intricate mechanics of this move, explain precisely why it matters to you, and unveil what it signals about the future of money itself. Metaplanet, a name that might have been completely off your radar just a year ago, is now aggressively positioning itself as a pioneer, making headlines of a move that screams pure, unadulterated conviction in the face of traditional finances skepticism. According to official filings and deep dive analysis, the company is gearing up for a monumental capital raise, a strategic power play designed with one singular, unwavering objective: to massively supercharge its Bitcoin-focused treasury strategy. Let's immediately unpack the sheer, staggering scale of this ambition. They haven't filed for a small, cautious loan or a minor secondary offering. They have formally approached the Tokyo Stock Exchange with a plan to issue a staggering 23.6 million new Class B perpetual preferred shares, with each share priced at 900 yen, which translates to about $5.71 US. Now, do the math with me. 23.6 million shares multiplied by 900 yen each. That simple calculation reveals a target of 21.2 billion yen, a figure that, when converted into US dollars, amounts to approximately $135 million. Let that number sink in for a moment. We are talking about a company raising over $135 million not to fund research and development for a new product, not to expand into a new market, not to acquire a competitor, but with explicit, publicly stated intention of pouring that capital directly into Bitcoin. This isn't a side bet. This is the core thesis. This capital raise is the engine they're building to fuel their primary mission. But the what is only half the story. The how is where things get truly fascinating and reveals the sophisticated financial engineering at play. They aren't doing a standard public offering that would dilute existing common shareholders all at once. Instead, they are employing a method known as a third-party allotment. In simple terms, this means they are planning to sell this entire massive block of new shares directly to a select group of overseas investors, likely large institutions, hedge funds, or private equity firms that already share their bullish vision for Bitcoin. This is a targeted strike, not a scattered broadcast. It's a way to bring in powerful, aligned capital partners quickly and efficiently, bypassing the potential volatility and scrutiny of the open market. However, and this is a critical point of corporate governance, this entire monumental plan is not a done deal just yet. It is pending a crucial approval at an extraordinary shareholder meeting that is scheduled for December 22nd, 2025. This gives you a timeline. This is the date to watch, the moment when Metaplanet's existing shareholders will vote to either endorse this radical strategy or potentially halt in its tracks. Now, you might be asking yourself, why is this such a big deal? Companies raise money all the time. The profound significance of Metaplanet's move lies in its context and its precedent. Think of MicroStrategy, the American business intelligence company that has become synonymous with corporate Bitcoin adoption. Metaplanet is effectively and quite deliberately positioning itself as an Asian MicroStrategy, but with a crucial twist. They are operating within the Japanese financial system, a system known for conservatism and strict regulatory oversight. By doing this, they are not just buying Bitcoin for themselves. They are building a bridge, a regulated, transparent, and publicly traded on-ramp for traditional investors in Asia and beyond who want exposure to Bitcoin, but are hesitant to navigate the complexities of crypto exchanges, private keys, and digital wallets. They are offering a familiar vehicle, a stock ticker, to gain access to a revolutionary asset class. This legitimizes Bitcoin in a way that 1,000 tweets from crypto influencers never could. It sends a message to the entire financial world that a publicly listed company on a major exchange sees more long-term value and strategic strength in a decentralized digital currency than in holding its own national currency, the Japanese yen. This is a direct, audacious vote of no confidence in the traditional system of monetary debasement and a powerful, tangible bet on a digital, finite alternative. But before we dive even deeper into the global implications and the intricate dance between corporate treasury management and monetary sovereignty, I need you to do something for me right now. If you're understanding the gravity of what's happening here, if you're seeing the pieces of this financial puzzle come together, then hit that like button and subscribe to the channel right now. So we've established this monumental $135 million capital raise targeted squarely at Bitcoin acquisition. But to truly grasp the seismic implications of Metaplanet's play, we need to zoom out from a Tokyo Stock Exchange and view this not as an isolated corporate event, but as a single, powerful move in a much larger, global chess game being played between a legacy financial system and the emerging digital asset ecosystem. This is where the story transforms from a fascinating business case study into a narrative about the very future of capital itself. Let's start with a profound signal that sends the market. When a publicly traded company, subject to rigorous audit standards and fiduciary responsibilities, makes such a definitive bet, it acts as a powerful stamp of legitimacy. It tells institutional investors, the pension funds, the asset managers who have been cautiously watching from the sidelines, that Bitcoin is not just a speculative toy for retail traders. It is a serious, strategic Treasury reserve asset, a legitimate hedge against the very systemic risks that threaten their traditional portfolios. Think about the current macroeconomic environment for a moment. We are living in an era of unprecedented global debt, with central banks around the world, including the Bank of Japan, engaging in aggressive monetary policies that devalue their currencies. We're talking about negative real interest rates, where holding cash in the bank guarantees a loss of purchasing power over time. In this context, Metaplanet's decision is a brilliant, if risky, defensive maneuver. They are explicitly stating that they view Bitcoin, with its verifiable scarcity and decentralized nature, as a superior store of value to the Japanese yen sitting on their balance sheet. They are choosing a digital asset with a fixed, predictable issuance schedule over a fiat currency whose supply can be expanded at the whim of a central committee. This is corporate treasury management as a form of protest against monetary debasement. It's a direct application of the laser eye philosophy to the cold, hard numbers of a corporate balance sheet. And this isn't just theory. We can see the immediate financial engineering at work. By raising capital specifically through perpetual preferred shares aimed at crypto-native investors, Metaplanet is strategically aligning its shareholder base. They are bringing in partners who understand and support the long-term vision, investors who are less likely to panic sell during Bitcoin's infamous price volatility. This creates a stable foundation for their strategy, insulating them from the short-term demands of traditional equity markets that might not understand a multi-decade bet on a digital paradigm shift. Furthermore, this move creates a powerful flywheel effect. As Metaplanet uses this new capital to buy more Bitcoin, it increases the scarcity of the available supply on the open market, a fundamental principle of economics. Each purchase they make reinforces the value proposition for every other Bitcoin holder, including you and me, but the ripple effects extend far beyond price. Metaplanet is creating a transparent, real-world case study for how other corporations, not just in Japan but globally, can technically, legally, and strategically adopt Bitcoin. They are navigating the regulatory landscape, figuring out the custody solutions with regulated partners, and proving the model in real time. They are quite literally writing the playbook that other CFOs and corporate boards will eventually follow. If this strategy proves successful, if their stock price continues to correlate with and benefit from their Bitcoin holdings, it will create immense pressure on other companies to consider a similar path to avoid being left behind. We could be looking at the dawn of a new corporate arms race, not for physical assets or market share, but for a position in the finite digital gold of the 21st century. The upcoming shareholder vote on December 22nd, 2025, is therefore a referendum on this very idea. A yes vote is a green light for this new corporate paradigm. It's a declaration that this company, and by extension its shareholders, believe so firmly in this digital future that they are willing to transform their entire corporate identity to embrace it. The implications are staggering, potentially paving the way for a wave of imitation across Asia and other regions that have been slower to adopt. This is why you need to pay attention. This is more than just one company's investment. It's a test of the maturity and readiness of the entire Bitcoin ecosystem to serve as the bedrock for a new era of global finance. Now, I want to hear from you. This is a live, unfolding story, and your perspective is crucial. Do you believe Metaplanet's aggressive strategy is a visionary blueprint for future corporate treasuries, or is it a reckless gamble that could backfire spectacularly? And more importantly, if this model proves successful, which publicly traded company do you think will be the next to announce a major Bitcoin treasury allocation? Let me know your thoughts, your predictions, and your analysis down in the comments below. Let's get a conversation started about the future of money. And if you found this deep dive valuable and want to stay ahead of the curve on these monumental shifts in finance, make sure you don't miss out. Hit that subscribe button and ring the notification bell so you're the first to know when we break down the next big story. The financial world is changing faster than ever, and together, we can work to understand it.